Welcome to the Tech Egg. Don't get scrambled. Enjoy the video.
In this video, I will explain how to make a journal ledger. Let's start by understanding its fundamental role in accounting. A journal ledger is where you first record every financial transaction your business makes, acting as a chronological log. This initial step is crucial for maintaining accurate financial records and forms the foundation for all subsequent accounting processes. It ensures that every financial event is captured systematically. Understanding debits and credits is essential for proper journalizing. Every transaction impacts at least two accounts, with one account debited and another credited. For instance, an asset account increases with a debit, while a liability account increases with a credit. Always remember that total debits must equal total credits for every single entry to maintain balance. When recording a transaction, first identify the accounts involved, such as cash or sales revenue. Next, determine if each account should be debited or credited based on the transaction type. For example, if you received $500 in cash for a sale, you would debit cash for $500 and credit sales revenue for $500. Always ensure your debits equal your credits. After journalizing, the next step is posting these entries to the general ledger. This involves transferring the debit and credit amounts from your journal to the respective individual ledger accounts. Each ledger account will then show its current balance, providing a clear summary of all transactions affecting it. This organized data is then used to prepare financial statements.
Thanks for watching. Consider subscribing if I helped unscramble your problems.